Well, debt-ridden Dubai world is getting a much-needed hand from its government. Dubai plans to inject $9.5 billion to help restructure the $23.5 billion debt for its flagship conglomerate. But the question is, just how is the government planning to fund this? The government has already borrowed $10 billion from the United Arab Emirates and another $10 billion from Abu Dhabi in 2009. We're going to, of course, be talking about Islamic bonds. The global sukuk market raised about $19 billion in 2009, although it is off to a rather sluggish start in 2010. According to a Reuters poll, Islamic bond issuance is likely to range between $15 billion and $17 billion this year. But can investors still look forward to a number of new issues in this region as governments in Indonesia and Malaysia are all set to sell Islamic debt to finance their budget? And for a closer look at the Islamic bond market, let's chat with Arfat Selvam, Managing Director of Arfat Selvam Alliance. Well, thank you so much for dropping in. We really appreciate it. Now, you deal more with the legal aspects, so you're not really going to talk to us about how the market is really shaping up or the money flows. But if you take a look at a lot of the deals that you've been looking at in terms of the legal perspective, a lot of people that I've spoken to say the biggest difficulties in the Islamic bond market is not so much the way the products are structured, but how you explain the products are structured, so that they understand that there are that nobody is breaking the Islamic code, right?
Right. I think, if you look...
So your job is very critical. You've got to explain well. It's more about how you explain, not the way they're structured.
Yeah, when you talk about Islamic financing or Sharia bonds, you are not looking at... you're not looking at very different from a capital market instrument. But what's different is that when you talk about Sharia financing, you're talking about a concept for which money has no intrinsic value.
Right.
So therefore, you're not talking about
talking
about interest. That's one thing. And then you're talking about ethical investing, which means that you cannot invest in things which, according to the spiritual and the moral laws of Islam, are not permitted, things like that. So those are the two things that you have to remember. And also, because money doesn't have intrinsic value, then you cannot earn interest, and therefore it's always profit sharing.
Right.
It's always you take a risk for which you earn a profit. There is no such thing as a guaranteed income.
The big perception problem seems to be that a lot of people think the Sharia bonds are rather, the market is rather illiquid.
Right.
And even though the debt markets worldwide, some may argue that it's in trouble because of the money flowing onto all these governments printing money, yet these legal hurdles are preventing a lot of countries from issuing bonds. For instance, the Philippines had to shelve plans. France also doing the same. What is it about the legal hurdles that is preventing the market from becoming more successful, more popular?
I think the market is very used to how the conventional bonds operate. So, for example, if you take Singapore, right, the market looks at how you would tax interest on earnings that are paid out of the bonds. But return, which is other than interest, is new to the market. And so what Singapore does is it aligns the sukuks with the bonds, treat the sukuk payments as though it is interest. But that needs a legal change. And so we've done it in Singapore. And so the other countries in the region who are trying to benefit out of this flow of funds from sukuk are trying to make these changes.
I see. And we are expecting a rather big announcement from Prime Minister Najib Razak next week about this new economic model. Malaysia accounted for half of global sukuk bond sales last year. Do you think he's going to make some significant changes to make it a more thriving investment destination in terms of Islamic financing?
Well, you will see that initially Malaysia was taking the lead. But just before the crisis, the Middle East came out with a lot of bonds, and so Malaysia needs to revamp the way
What needs to be changed?
So I think for Malaysia, you need to have more rules on insolvency and robust rules on restructurings. Those need to be changed, especially in the light of what's happened for the global crisis. And unfortunately, what happened for Dubai World is not going to deflate sukuk bonds because of the injection from the Dubai government announced yesterday. But going forward, there is a need for more robust insolvency and restructuring rules relating specifically to sukuk, because sukuk is always asset-based. So when you dismantle it, it's not like dismantling bonds. You have to deal with the asset that's underlying it, and that's quite tough.
I see some great points you highlighted. Thank you so much for your time. We appreciate you coming in. Arfat Selvam of Arfat Selvam Alliance.